I have a confession to make. I was once scammed by my credit card company. Well, I'm actually still mad about it. Let me tell you about it. In 2019, I had 2 credit cards, an American Express and an HSBC Visa. My American Express was charged P70 because of unauthorized transactions. I immediately called them up and told them to reverse the charges. They investigated and took around 3 months to tell me that they found out the person who used my card was someone who works in their customer service department. Of course, I didn't authorize anyone to use my card, so I asked if I could be exempted from paying for the amount. Since it wasn't me who used the card? Nope. The agent told me that I should have notified them within 30 days. Since it took me 3 months to call them, they won't do anything. What? We were both shocked when they told me that I needed to pay the amount, and so I did. It was a really bad experience. HSBC, on the other hand, treated me like a real human being. When I called them to report that my card was lost, they asked me a few questions to verify my identity, and then blocked my card. After I gave them all the information they needed, they told me that there was no need to pay for the card, and they even gave me a brand new one for free. Wow, that's how it's done. Today, I still use credit cards, and you might have realized which banks are my favorites. Here are my top 3 reasons why. They protect you. If something happens to your card, you won't be liable for any fraudulent transactions. They're convenient. There's no need to carry cash or swipe your debit card. I use my credit card for everything from groceries to online shopping and bills. They build your credit history. Every time you use your credit card and pay on time, you're building your credit score, which can help you get better deals on loans and mortgages in the future. But let's face it, credit cards are dangerous. If you're not careful, they can land you in serious debt. And according to data from the Bangko Sentral ng Pilipinas, Filipinos are getting worse at managing their finances. In 2022, total household debt reached 14.2 trillion pesos, which was 63.6% of the country's total GDP. That's a lot of debt, and credit cards account for a big chunk of that, making it the 3rd biggest source of household debt in the Philippines, behind home mortgages and consumer loans. But don't worry, I got you. In this video, I'll debunk the 3 biggest lies about credit cards so you can avoid the debt trap. Now let's get started. Myth 1. Minimum payment protects you. This is the lie that many Filipinos live by. As long as I pay the minimum, I'm safe. The thing is, this is partially true. Paying the minimum will ensure that you don't get any late fees. Banks typically start charging late fees if you miss a payment by more than 30 days. But that's where the protection ends. You're only paying 2 to 5% of what you owe. The bank will charge interest on the remaining 95%. And this interest isn't just a small fee. If you carry a balance month after month, it can easily add hundreds or even thousands of pesos to your bill. And the worst part is that the interest rate on credit cards in the Philippines is high, ranging from 2.5% to 3% per month. To put that in perspective, if you borrow 10,000 pesos with an interest rate of 3% per month, you'll end up paying 13,572 pesos for just borrowing that amount for 12 months. And this is where the trap starts. You end up paying more and more money without realizing it because you think you're safe. As long as you pay the minimum, you're only digging yourself deeper into a hole. Once you get into this cycle, it can be hard to get out. So here's the fix. Pay in full before the statement date, not the due date. Paying in full means that you're repaying the entire balance of your credit card bill by the statement date. This way, you won't be charged any interest or late fees. Yes, I know it's hard, especially if you're on a tight budget, but it's worth it. If you can't afford to pay in full, try to pay as much as you can, even if it's just a little bit more than the minimum. It will help you avoid paying too much interest. Myth 2. Zero interest promos are free. This is another lie that many Filipinos fall for. Zero interest means I'm not being charged. Now, it's true that during the promotional period, you won't be charged any interest, but that doesn't mean it's free. In fact, it's quite the opposite. Most merchants inflate the price to absorb the interest costs. For example, if you buy a TV worth 30,000 pesos on installment with a 6-month zero-interest promo, the merchant will likely increase the price to 32,000 pesos. So instead of paying 30,000 pesos for the TV, you'll end up paying 32,000 pesos. Plus, if you miss one payment, the entire zero offer will be void, and you'll have to pay interest on the entire amount. This is where the trap starts. You think you're getting something for free, but you're actually paying more than you should. And once you miss a payment, you'll have to pay a lot more. So here's the fix. Don't spend unless it's in your budget. A credit card is a great tool, but it's not free money. Just because you have a credit card doesn't mean you can buy whatever you want whenever you want. If you're not sure if you can afford to pay for it in cash, then you can't afford to buy it on credit. And now, for myth no. 3. Just for emergencies. This is the lie that many Filipinos tell themselves. It's okay, I don't use it. It's for emergency only. And this is where the trap starts. You tell yourself that you'll only use it for emergencies, but then you find yourself using it for non-essential purchases. Maybe you see a sale that you can't resist, or you just want to treat yourself. Before you know it, You've swiped your card more times than you can remember, and then the bills come, and you panic. Here's the fix. Build a real emergency fund. A credit card is not a parachute. It's a loan that you need to pay back with interest. If you're going through a financial crisis, don't rely on your credit card to save you. Instead, turn to your emergency fund. An emergency fund is a safety net of money that you set aside for unexpected expenses. It should cover 3 to 6 months of your living expenses. Having an emergency fund will help you avoid going into debt when life throws you a curve. Now, don't get me wrong. Credit cards aren't evil. They can be a great tool if you use them responsibly. That's why it's important to understand how they work and what you're getting yourself into before you sign up for one. If you're a Filipino who wants to level up your money game, follow MoneyBuilt PH for real talk, real money tools. Our channel covers all things personal finance, from budgeting and saving to investing and growing your wealth. I'll see you there.